The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Happy Tuesday. Is it your favourite day? Maybe not. But it's my favourite day because I get to work with Juliana Tattlebaum. Look, I look the wrong way. You're that way. Juliana Tattlebaum. And indeed myself, Steve Sedgwick. Getting to work myself is always a joy. These are your headlines. The S&P 500 and Nasdaq enjoy their best session since May, even as trade tensions with China simmer. While Broadcom jumps a mere 10% after becoming the latest chipmaker to ink a deal with OpenAI.
President Trump declares the end of the war in Gaza as the last living Israeli hostages are returned and hundreds of Palestinian detainees are released. At a special summit in Egypt, Trump points to an era of peace.
I intend to be a partner in securing a better future. We're going to be working, you're going to be working with the United States, and we're going to make sure that the Middle East is going to be a safe and secure place.
And silver prices set an all-time high after a historic short squeeze on the London market. We'll talk through the moves and the outlook for the precious metal with the CEO of the London Metal Exchange, Matt Chamberlain, coming up at 7:30 BST.
Not gone mad at all, has it? It's not gone completely bonkers. I mean, the moves we saw, and you're going to do it in a few moments' time, ignoring the fact that the port fees in both China and the US are going up because there's trade tensions. We haven't resolved the rare earths issue. We haven't resolved the 100% extra tax issue or tariff issue from the Trump as well. But the market, because of that one tweet over the weekend, or one Truth Social post, has ignored everything and just gone gangbusters again.
I think a lot of investors have taken a learning from...
Do you say investors or traders?
Well, good, fair point. I think the market has become very short term, but those market participants, let's say, have taken a learning from back in April, and that's to take President Trump at his word, and that seems to be what's happening.
By
or what
every
happened
dip
yesterday.
in sight.
Yes, but so far, the bounce back seems like it may have proved short-lived. We'll get to U.S. futures in just a second, but here's how the U.S. session wrapped up yesterday. We saw bounce back U.S. markets recouping more than half of the losses incurred on Friday after that big sell-off. So we haven't fully regained that lost ground, but we had a positive session nevertheless. All three of the majors stateside gaining ground, the tech-heavy Nasdaq gaining 2.2%. It was, of course, the worst hit on Friday, losing more than 3.5%. In terms of U.S. tech, what moved yesterday? You've got Microsoft gaining slightly yesterday. NVIDIA, Tesla also gaining ground. But as you can see on your screens there, the huge mover was Broadcom. That stock up almost 10%. OpenAI has agreed to buy 10 gigawatts of computer chips from U.S. semiconductor firm Broadcom. The deal could cost up to $500 billion on top of nearly $1 trillion of deals it signed with the likes of NVIDIA and Oracle in recent months. We'll talk more about that deal in just a moment. But on to Asian markets and the overnight trade. Yesterday, Japanese investors returned to the trading floor after a long weekend, and we've seen an outsized sell-off in Japan. The Nikkei 225 off 2.8%. Also some selling pressure over in Hong Kong. The Hang Seng down 1.6%. It also retreated in yesterday's trade. And again, similar to yesterday, more resilience in mainland China with the Shanghai Composite down just 0.3%. As far as European markets are concerned, yesterday we also saw a rebound similar to what we saw stateside. Stock 600 gaining 0.4%. But this morning we are looking at a retreat. So investors giving back some of the gains that we saw come through yesterday. Similar story for the U.S. So let's get over to U.S. futures. You can see where things stand right now. The Nasdaq, the Dow looking to both drop about 200 points or so at the open. So yes, we did see this major bounce back yesterday on the back of President Trump's Truth Social post over the weekend. But clearly there are still a lot of jitters in the market.
Is anyone saying that AI is not a big deal? I haven't spoken to anyone who says AI is not going to be a big deal, whether you like the valuations or not, right? So we're all on the same page. Let's all kind of say we think AI technology is phenomenal. Even I've used ChatGPT in the last 3 days, and I was blown away by it. It was fantastic. what we are trying to say on this show, or I'm trying to say, and I won't speak for you and Karen, is that sometimes things need a pause. Sometimes the valuations race away. I'm not saying the railways aren't a big deal. They were pretty good. I'm not saying the internet wasn't a big deal. I'm not saying the canals, when they started building them, weren't a big deal, etc., etc. But the fact of the matter is, some of the numbers being thrown around are terrifying. You've now got this Broadcom story in the last 24 hours. So you've got Broadcom, Nvidia, AMD, Oracle, and others all inking deals with OpenAI. OpenAI has signed commitments and deals and purchases. We're well over $1 trillion now. We are well over $1 trillion of spending commitments, Now, there's all kinds of deals, whether it's part of equity or however it may be, with some warrants or however they're going to pay for this stuff as well. OpenAI at the moment is estimating its revenues, not profits, revenues for this year somewhere in the region of $15 to $20 billion. That's great. It's going well. And they are talking about 10x pretty much going up to 2029, or a very, very big increase, up to somewhere in the region of $125 billion at the moment. But let's call it $150 billion. Let's call it $200 billion, whatever you want. Does anyone else out there spot that there's a margin for error on the profitability of this company and the exercise when you're spending significantly over $1 trillion? Your revenues, not profits, I keep trying to say it, revenues, not profit, have to go up 10x to even match expectations. Can anyone else spot that there might be an issue out here that actually maybe we're just running away with ourselves in terms of valuation?
I would just come back to say that a lot of these tech companies, these growth companies, do trade on price to sales, not necessarily price to earnings, because once things get going, those sales can very quickly translate into earnings down the line. But right now, we're clearly in this major investment phase, and investors don't want to miss out on backing the right horse.
How much do you pay for ChatGPT?
Nothing right now. Use the free service.
Huh? Not a lot. No, I didn't think so.
But we are just a fraction of who they ultimately aim to reach here.
Yeah,
I think that the
sure.
possibilities
and is it just
are
one
vast.
chat bot that's going to be out there? Is it just going to be powered by OpenAI?
Well, part of the reason
so
that
there's no competition. There's no commodity. Like in every single technology in history, there's going to be no commoditization. There's going to be no price depreciation. There's going to be no margin erosion once this becomes ubiquitous, once it becomes diffused.
I think part of the reason that we're seeing the breadth of this mammoth surge into AI stocks is because people understand there's going to be more than one chatbot out there. And yes, ultimately that might lead to the commoditization and the price coming down for some of these services. But right now, people want to back multiple horses to make sure they don't miss out on one of the big winners.
The problem is that all those massive companies that have so many fingers in different pies, like Oracle, AMD, Nvidia, Broadcom, they're getting a concentrated valuation uptick on the back of AI, and therein lies another problem.
Yes.
You've got a lot of other reasons why you might want to own these stocks, but the valuations are getting to a level that it's all based on one horse.
And I think
that's the problem for me.
To that point, and a related point, with this Broadcom deal, no financial terms were disclosed, and Broadcom shares climbed almost 10%. And we've seen that time and time again with companies simply associated with OpenAI. No financial details disclosed, and the stocks bounce on the back of it. So it's pretty blind trust that this is going to lead to significant,
But you know what?
Gains.
I'm sorry, Adam. I'm going to count. You know what? You can hedge yourself out there, because if you're really worried about AI and you're really worried about the technological bubble potentially, you can hedge yourself in gold. Oh, you can't, because it's up 50% this year. We'll come back to this. More than 20 world leaders gathered in Egypt for a peace summit, which included the signing of an agreement between Israel and Hamas, despite neither side being present. Hamas yesterday released the remaining 20 living Israeli hostages, whilst Israel released almost 2,000 Palestinian detainees and prisoners under the first phase of a peace agreement. US President Donald Trump says negotiations on phase 2 are underway. Dan is in Dubai. Dan, looking at the euphoria of prisoners, detainees, hostages being returned home, I challenge anyone not to have felt that was heartwarming, whether you were in Tel Aviv or whether you were in the Arab world as well. This is fantastic news. But phase 2 looks very, very torturous already, especially when phase 1 hasn't even been completed. The 28 bodies of hostages, my understanding as of an hour or so ago, still haven't been returned to their families in Tel Aviv and elsewhere.
I agree with you, Steve. And President Donald Trump returns to Washington after brokering a ceasefire that has really set off emotional reunions and also fresh hope for peace, not just inside Gaza, but also inside Israel as well. And under this US broker deal, Hamas has released those final 20 living Israeli hostages held in Gaza. In exchange, we've seen Israel also beginning to free nearly 2,000 Palestinian prisoners as well. Of course, we also saw President Trump going on to Egypt in the aftermath of his address to the Knesset inside Israel as well, where he declared that the war in Gaza is over and also urged a turn towards peace for the region. He framed this moment, and I quote here, as an historic dawn of a new Middle East. Of course, inside Egypt as well, he was met by other world leaders. He signed a vision statement on Gaza's post-war future, basically focused on rebuilding, humanitarian access, and regional guarantees as well. But of course, as you say, there are plenty of questions that remain. Here's the president speaking on the ground in Egypt.
That Gaza's reconstruction requires that it be demilitarized and that a new, honest civilian police force must be allowed to create a safe condition for the people in Gaza. As I said earlier, I intend to be a partner in securing a better future. We're going to be working, you're going to be working with the United States, and we're going to make sure that the Middle East is going to be a safe and secure place. It's a very important place in the world.
President Donald Trump speaking there. And of course, plenty of questions being asked around the region now. Chief among them, how will Gaza actually be governed? Will Hamas dismantle and will it disarm? And of course, other questions like where will the billions of dollars that are going to be required in order to establish some kind of state inside Palestine going to come from? And of course, can this ceasefire hold, or will we see ultimately a revert back to violence as well? These are questions that we really don't have answers to at this point. Also important to point out that hardly any Hamas or Israeli representatives were on the ground at that Egyptian summit. You don't necessarily have to read too much into that. Of course, perhaps it's a reminder that there is, still a bit of a gap here with regards to which way this could go. But of course, at the same time as well, Netanyahu declining to attend that summit in Egypt because it clashed with a Jewish holiday. Nevertheless, to go back to what you were saying before, this is a major diplomatic win. The hostages are coming home. The ceasefire is in place. Trump's peace plan has been quite well received around the region. But of course, the road ahead still looking quite fragile at this point.
Indeed. Thank you very much indeed, Dan. Turning our attention to Europe, yesterday's summit was attended by several leaders from the continent as the bloc eyes a potential role in post-war Gaza. The European Union is the largest donor to the Palestinian Authority. However, the agency plays only a small role in Trump's peace plan. Several European leaders weighed in yesterday on their potential role.
The international community will show up. It's the objective of the conference which will be held here. And so the countries of the region, which already did so much, will continue to do so, to finance. Egypt will have a key role with other countries of the region to host people in their hospitals, and Europe will also participate.
The challenge now is tomorrow, an implementation, and therefore, yes, today is historic, but what happens tomorrow really matters. And that's why what I've been discussing with leaders all day is what part can we play? And we, the United Kingdom in particular, I think, can play a part in monitoring the ceasefire, but also decommissioning the capability of Hamas and their weaponry.
Coming up on the show, the U.S. and China continue to trade barbs amid escalating trade tensions. Plus, a silver surge breaks a 45-year record. We'll hear from the CEO of the London Metals Exchange later this hour. And U.S. senators are expected to return today for a fresh vote on reopening the government. We'll speak to former House Majority Leader Eric Cantor at 9 a.m. BST. The U.S. and China will charge additional port fees on each other's vessels as trade tensions between the two largest economies ramp up. Beijing said that it had begun collecting special charges on U.S.-linked ships yesterday, with exemptions for Chinese-built ships. Meanwhile, the U.S. is set to begin rolling out the extra charges today. Meanwhile, U.S. Treasury Secretary Scott Bessent told the Financial Times that China wants to pull the rest of the global economy down with them after it imposed export controls on critical minerals and rare earths last week, leading President Trump to threaten a further 100% tariff on Chinese imports. The FT says one retaliation path the U.S. could take would see firms forced to get a license if they want to export software to the country. Speaking to the paper, Besson said if China wants to slow down the global economy, they will be hurt the most. We'll get a check on the trade outlook and the latest on U.S.-China trade tensions with U.S. Trade Representative Jameson Greer at 4:30
So
London
just to
time.
confirm, things got worse on the trade relationship over the last 24 hours. Just to confirm that for everyone who bought the Truth Social post.
You know, I had to read Scott Besson's various comments multiple times because there was a lot in there.
Yeah.
His suggestion to Fox News that the meeting between Xi and Trump is most likely still on, pretty dovish, and I think that's part of what supported sentiment yesterday. But then this morning in the FT piece, pretty hawkish comments calling China out for trying to bring the rest of the world economy down with it. So I would say mixed signals coming out of the administration, and maybe that's why you're seeing a pullback in futures right now.
Okay. UK employment rose by 91,000 jobs on a quarterly basis in the 3 months to August, sharply missing expectations, nudging the unemployment rate up to 4.8%. Wage growth slowed slightly to 4.7%. That is in line with expectations. European equity futures look like this. We are called easier across the continent. Florian Jelpo is the head of macro multi-asset team, Lombard ODA Investment Managers. Florian, lovely to see you. How are you?
I'm good. Thanks for having me.
Always a pleasure, sir. Let me ask you the most basic question on planet Earth. Are we in an era of exuberant valuations, or actually is there good value left in the market?
I think there's still good value left in the market.
Great.
And I think every 5 minutes we're using this rational exuberance lingo. And I think we need to put a little bit of order in this situation. The way we see things is we're saying we're in a period of, let's say, expensive momentum. Like we've seen a strong momentum force rising the value of selected assets across the market. We are speaking a lot of tech, we're speaking a lot of growth, but rather if you're a quant investor as we are, you'd rather speak of momentum, because momentum is something that just not just equities, but also credits and currencies and bonds. And at the moment, that momentum factor is very expensive.
When does momentum and longer-term valuation metrics, when do they collide? Because ultimately valuation matters, but it doesn't matter while momentum is so powerful.
Exactly that. What's interesting is to look at the expensiveness of this momentum factor for one reason, because it helps you call the moment when the market is likely to rotate. We're not calling something like a downfall of markets. The strength of risk appetite is quite strong and remains strong at the moment. What's really interesting, I think, is to look at this momentum factor being expensive mean that there are many other pockets in across markets that are currently left on the side. I'm thinking of bonds, I'm thinking of Swiss equities, European equities, I'm thinking of selected credit sectors, which have been left also on the side, very interestingly, and that gives opportunity to reshuffle a little bit of your exposures ahead of a potential rotation. So what we're fearing is a continuation of rotation, not necessarily a collapse of growth stocks anytime soon.
Is there good reason that bonds have been left on the side, though? Is it simply a case of momentum driving trade elsewhere? Or when you look at governments' fiscal positions around the world, does it make sense that bonds have been left to the side?
You have inflation, you have the fears we have on the fiscal side across the planet, be it in the UK, France, the US, it's everywhere. So there are like fundamental reasons for that. Now think of momentum as fashion, right? Fashion, they come and go. And it's pretty much probably what we are likely to see. Maybe what we had last Friday was maybe the starting point for a consolidation phase. We're hitting the pause, and now we're trying to rethink where value is. Plus, we've been remembered that uncertainty, which is still the key word for 2025, remains quite elevated. So what do you do when uncertainty rises? well, normally you move away a little bit from momentum and you go to value, and that's pretty much what we're thinking of at the moment.
So you think that Friday may actually have marked a turning point, that some of those momentum trades, which have been working exceptionally well over the last few months, are actually going to start giving back, and we could start to see a rotation?
First, there is a sequence, right? I think it started with Oracle, and the paper mentioning how data centers maybe are not as profitable as what we were thinking in the first place, and we see that China and US relationship is not as good as we thought, also with tech at the heart of it. So you have perfectly rational, fundamental reason that can weaken momentum in that place, but there are plenty of values to be found outside of that. Again, govies, government bonds is a very interesting place to look at. If you look at the story about the earnings yields on the S&P and Nasdaq, and you compare it to your 10-year yield, well, basically you're getting paid to de-risk. So it's a call for cautiousness.
So why are you being paid to de-risk? What is the market telling us about the bond market if you're getting paid so generously to de-risk?
I think it ties to the vast capex programs we're currently witnessing, especially in the US. These capex is a cost, okay? You're preventing yourself from consuming today because you're expecting that in the near future things will be much better.
When you say capex, you mean the government capex?
No, I mean a corporate
capex.
Yeah.
Okay.
And this is the cost, and it's very difficult to gauge the input of that cost in terms of future earnings, right?
Right.
So when we look at projections at the moment, things look expensive and rather uncertain. When you look at what's happening basically with your 10-year yield, well, the Fed told you, I'm worried about employment. So basically,
but why are our viewers in herds like I haven't seen for a long, long time buying an asset that has already doubled this year and provides no yield?
You mean gold? I'll give you the long answer, if I may.
Please.
Which I'll keep it short. There's this old paper from the year 2000 called The Golden Constant by Erb and Harvey. Every gold bug knows of it normally, which says that basically gold is the currency of a country with no inflation, and it trades against the currency of a country with inflation called the United States. Okay. There is a long-term relationship between these two, between inflation and gold for that reason. Basically, if you live in a country with strong inflation, you know it, your currency is due to fall, and gold has this privilege of not having inflation at all. For a very long period of time, I mean 2015, maybe 2021, we've seen gold derailing from that relationship to inflation. And now I'm seeing that as a catch-up with it. Now, what that relationship tells you is the top value should be 4,500. Past this point, we would have seen the largest exuberance of I'm using it myself of gold prices versus its fundamentals. We're not there yet, and it's important to keep in mind that there are perfectly rational fundamentals to this rise in the price of gold.
What a simple, smart way to think about gold relative to the U.S. market and how inflation factors in here, but the Fed doesn't seem overly concerned that inflation is going to be a problem in the U.S. So, it's a little curious that gold has continued to rally. It's sort of like, having your cake and eating it too. Inflation not seen as a big enough problem to deter the Fed from cutting rates, but seen as a big enough problem to drive the gold trade.
Actually, I think it's somewhat consistent. By that, I mean that when you look at the minutes from the Fed from last week, what they told us is that they are increasingly worried about the situation in terms of employment and not so much in terms of inflation. Now, inflation forecasts, as you may know, are way above the Fed's target. So the US is this exceptional economy where the central bank is officially telling you, well, I'm ready to disregard inflation at the moment because my eyes are elsewhere. And when something like that happens, well, basically rates are going down, inflation is going up, which is the perfect storm for seeing your currency go down and the rest of the currencies around you progress. We've had a bit of that with the euro, with sterling, with the Swissy since the start of the year. Gold is just the perfect currency to play the inflation story against.
So what does that mean for the yield curve? I mean, all of that suggests that we are going to continue seeing a sell-off at the long end of the yield curve, I would imagine.
It's difficult to say. I think it's one of the first things I've learned as a portfolio manager was don't fight the Fed. And when the Fed tells me I'm going to cut rates 4 more times within the next 12 months, I should be listening, because at some point, if the curve doesn't go where the Fed wants it to go, well, they have unlimited firepower to make it comply with its orientation. So let's say short term, we're worried. We don't see the 4% threshold on 10-year yield being passed that easily. But next year, we see rates going down, 10-year yields at 3.75. And that's where the Fed wants those rates to go.
Just one more for me. I've got a couple of seconds. If the economy grows nicely, US economy, global economy, things are slightly better than expected, and interest rates are slightly firmer than expected, and we learn to live with 2.5% to 3% inflation. 2% seems a bit far-fetched at the moment as well. Do some of those safety trades, such as gold, what people have flooded into, do they evaporate a little bit, or do you see a lack of momentum? Because, I mean, given where we've come from as well.
Again, you need to find where momentum is going. That's pretty much what we're doing as portfolio managers. And the environment you're describing is very likely to be the environment of 2026. So what basically, does it end the growth, the tech trade? I'm not sure. Does it end the gold trade? Well, maybe it will be weighing on the gold trade overall, I would say. Okay. So pick your battle and try to find value in this momentum mess, because basically we're coming to the end of the year and we need to rethink our exposures.